Thank you so much. Appreciate the opportunity to give my take on what I consider the biggest break that day traders have had since the advent of exchange traded options and option contracts and futures contracts and mini contracts. The idea of prop trading, where you can actually trade somebody else's money and get 90% of the profit. That is something that can take a little bit of the edge off trading, because the mental part, as Price mentioned, is part of my specialty. And whenever I build trading plans, and I've written several books on building trading plans, I always include the concepts of the mental and emotional part. And when you're trading somebody else's money, hey, look, you got to be responsible. You don't want to lose somebody else's money. But it does take a little edge off, but not enough really to take a struggling trader and make them successful just because you're not risking your own money. So today I want to talk about 4 of the must-haves, the must-dos in prop trading successes. I've been coaching for the last 2 years specifically traders to get funded, to then get past the red lines and green lines, and I'll give you an idea of what I mean by that in a second. But to actually start to use prop trading as a long-term income tool. So let's go through what I consider the 4 musts. Now I'm breaking this hour into the 40 minutes, which I think is great. I've eliminated some of the slides. I may kind of run through some, but I'm going to make sure that I hit the most important elements for you. I wanted to just talk about, just a second, recognize the idea of the bust line. I call it the red line. Because of the tight loss parameters that prop trading requires, there are a few techniques that you can employ that will limit your concern about the red line. And when I say concern about the red line, this is where you screw up as a trader. When you get close to that red line, you start being either too careful or too aggressive. And I want to show you, so you don't really want to get there. And there are processes, and I'm going to show you 4 ideas here that work to keep you from the red line so that you can actually go in the right direction much more consistently. All right, a little bit about me. Graduated from the University of Cincinnati, go Bearcats. Worked at the Prime and Wine restaurant. Cincinnati, I chose, studied engineering, graduated in mathematics. It was a work-study school. Didn't have the money to go, so it was go to school a quarter, work a quarter. So I've been working and really happily ever since. I've got a lot of energy, as you can probably hear in my voice. And I hope I'm going to try to slow down my speech a little bit. But the Prime and Wine restaurant, if you're in Cincinnati, you know it was one of the most popular restaurants around. I actually became the manager, the assistant manager of this restaurant. They moved me down to Dallas, Texas, to open one there. But I got into the nightclub business after that. I realized the money was in the liquor. And so I got into the nightclub business, which was, I was opening up nightclubs, hiring, and then moving on to the next club for American Events Corporation. We were supposed to be the prime competition for Studio 54. Never made that. We did charge $1,000 a year back in the 80s for membership at the club, but you can't stay in that business very long. I decided to use my math degree and my love for gold and silver at the time to enter the world of trading. And I started in the area of options because that was an area that I was attracted to. And this is not the exact room, but after 2 years in the business, I was responsible for the results of 63 traders. That's where I learned about what a trading plan is, how a trading plan should be constructed, what works, what doesn't. I'm going to say it in one word: simplicity. The more hoops you put into it to jump, the more confirmation you ask for, the less likely you are to get into a trade, and the less likely I think you are to win over the course of time. And it's mostly because of the mental and emotional part. If you wait too long for a trade, you start to do things you shouldn't, etc. Again, I'm going to be referring a bit to the mental and emotional part, but this was a room where I learned what trading plans work. And I would normally, I would get out my red pen when somebody wasn't doing the job and just take out some of their indicators. I mean, why would you need a MACD when you have an RSI? In the meantime, that was the situation in the late 80s. They were kind of buying people from other firms. And so I went over to Payne Weber, and I was a commodity trading advisor there, actually managing money for 20% of the profit that I generated. I loved that job, and it was very lucrative. The problem was there was a lot of selling involved, and I wasn't, I didn't like getting on the phone and selling. So I decided I would do my own thing. I started the Disciplined Trader in 2000, and it's been expanding, and I've been helping people ever since with not only the psychological part, but also, of course, the trading plan part. That's what you need. You need both of them. And in the last 5 years, I've been really focusing on the trading plan part of it with something I call Their Money, Your Profit, that I'll get to maybe a little bit later. But I want to get to the presentation proper. Here's, been books written about me. I've written several books on trading plans. I've written numerous papers on trading plans, industry papers, and so on. So that's enough about me. All right, point number one, you don't want to pray when you trade. You don't want to sit there. I mean, it's okay to root for your trade, but rooting too much is not what you want to do. Instead, you want to do the things to put the odds on your side. And when you do it in a logical way, when you put the odds on your side in a logical way, you develop trust in a logical way, you can run your trading plan without getting in your own way. So instead, you don't want to sit there and pray. I was going to say thank God, but I won't. Look, the more you ask, this is something that I tell new traders, the more you ask from a market, the less it's likely to happen. And the less you ask from a market, the more it's likely to happen. What I mean by that logic is that if you're in a trade and you ask it to, and you expect the long trade to reach the next resistance above it, you may be asking a lot. If you ask half that distance, it's more likely to happen on the way than it is for the full ask. I think you get my idea. So I don't want you just to ask for 1 or 2 ticks or 1 or 2 increments in a futures contract. But I do think that it's important to start to think about scalping. Therefore, it makes sense to include the element of scalping in your trading plan when you prop trade. Okay, something that it's something that I've noticed that once I've started adding that into the trading plan and started emphasizing scalping in the trading plan, not to exclusion of runners, but all of a sudden the people that I start coaching started to be more confident, started to really get what they were going much quicker. And there's a reason. You stay away from that red line. You want at least 50% or more of the contracts that you apply as scalps. Okay, in fact, at least 50% should be of prop trading should be scalping. If you apply 2 contracts when you initiate a trade, 1 should be a scalp. If you apply 3 contracts when you initiate a trade, 2 should be scalps. I think you're getting the idea here. And if you apply 5, let's hear it, at least 3 should be scalps. Okay, so always, you know, the oddball contract and an odd number of contracts should be included in the scalp column. Okay, it's all about padding your distance from the red line so that you trade comfortably and stay in your plan and adding positive balance to your account at the same time. So the idea is that when you take a trade, there's 2 things that are happening. When you take a trade, you're adding to the balance in your account as you're trying to reach the green line where you're either funded or and when you're funded, when you start getting paid, those green lines. If you're a prop trader, you know what I'm talking about. If you're not, don't worry about it. It's easy to understand. So it's all about padding your distance from the red line. And when you take a scalp, when you ask less from a market, you take a scalp, then you are not only padding, you're not only increasing the balance of your account, but you're also padding your distance from the red line. Okay, so here are some futures contracts to consider so that you can keep your risk at a certain level. You should be designing every trade with a maximum risk. For instance, when I trade a $50,000 account in I use Apex right now. I have used Top Step in the past, but in Apex, if I going for a $50,000 account and I have a $2,500 distance to the red line when I start out, I divide that $2,500 by 10. Okay, so I allow myself to take a $250 risk on every trade. Okay, so I've got 10 chances. Now, when you have a trading plan like we have with our loaded gun simple trading plan, if you're over 50%, if you're in the 65 to 72% area like loaded gun is, you've got plenty of room to be wrong once or twice and still come back very strong from a tested odds standpoint. So the idea here is that you want to, again, you don't want to flirt with taking too much risk on any trade, and you don't, but at the same time, you want to leave yourself room to grow. Okay, so in order to take multiple contracts and fit into that risk parameter, here are some smaller contracts that I suggest that you may want to take a look at. First of all, the obvious, the micro NASDAQ, the micro ES, there's even a micro for the Dow. Very flexible on your exposure. You can very volumed. You can add up a bit with round turn, can add up with round turn fees. But the round turn, if you're too worried about round turn fees when you're talking about $1.50 or whatever it is on whatever contract, you're looking in the wrong place. Okay, but it's something that you want to be aware of. It's the truth about trading. I mean, when you take on 10 NASDAQ contracts, you're paying 10 commissions. So, that $10, $20, $30 is, over the very long period of time may make a difference if you're a struggler. But if you're doing this right, don't worry about that. But the micro, NQ, and ES are very good contracts, the most popular. I always suggest that new traders look toward the FX, the euro, and the Japanese yen. The symbols are 6E and 6J. For the full contract, it's an easy fit. 100 points in either of these contracts is only $125. Okay, so for example, in the yen, in the euro, it's a 110 600 against 110.7 700. So you're getting a nice move, but it's only worth $125, and you can take on 2 contracts, say, in that arena. What I like about this, what I like about the euro and the Japanese yen is if you like to follow trend, which I do, these markets tend to trend. So really, new traders need to consider these 2 contracts also. Oh, and did I mention? Yeah, did I mention that the currencies tend to trend? I think I did. The other contract that surprises people, that surprises me, that most don't know about, is the mini crude contract. It's a half contract of the crude oil. These are half contracts, so in many cases you can apply and get a nice quick scalp and still have half left to run, because crude tends to pop, and not only run, but tends to pop. If you've got a good trigger, you can identify when this market is about to pop. You can get in and have a nice quick profit to be able to take that scalp and then see more on any remaining positions. But I want to show you exactly what I mean by that. So again, this point is to have at least 50% scalps. Okay, a frequent reliable trigger. For your seniors out there, I think you know what frequent is. Reliable, if you know AJ Brown, the trader. I don't know if you know him. Dave, but AJ Brown he's a trapeze artist too, and he's got his wife doing it. But you need to have a reliable partner in this particular case. You need to have a frequent, reliable trigger. Frequent means that you're not going to test your patience. When you have a trigger that is infrequent, you want to trade. You know that you can't make any money if you don't trade. Now, you don't give equal value to you can't lose any money if you don't trade. Somehow you're here to trade to make money. And if you have an infrequent trigger, that's going to push your lack of patience problem if you have one. And I'm emphasizing it because that was my problem early in. I wanted the action. I'm a guy of action. And so I wanted to I'm the trading plans I would look at would just not give me enough. That's why I decided to start building trading plans, because of my solution to this problem. But you really want the second point I'm making here is that you want a frequent, reliable trigger. Frequent means if you have a short period of time to trade, you need to have triggers. Otherwise, you'll be tempted to take lesser trades. That completes my idea there. When you do get strung out wanting a trade, you're going to take a lesser trade. And a professional trader always sticks to his A+ trades. Listen, not taking a trade is a decision. Doesn't mean you're not making decisions. You've made the decision to only take A+ setups, okay? So a pro tip is, if you want more triggers, shorten your time frame. Whenever I get a trader who can only trade for an hour a day or 2 or 3 hours a day, I suggest that they may want to look at the 2-minute candle chart, for instance. I like to trade the 5. It gives me some leisure. It's plenty of time to wait for the close of a candle, which I always demand of myself and my trading plans. You want to, the close of the candle is very important. The open and the close. When the Japanese farmers constructed the candlestick methodology, they only considered the open and the close. They didn't have any importance, or very little importance, on the wicks. So if you want more triggers, you want to shorten your time frame, okay? And so if you're dealing with the 5, normally deal with the 2. You're going to get more triggers, okay? I am not a proponent of the 1-minute candle. Although a lot of my traders still like it. They're learned on it, and I don't trade that. They're having success in that, but you have to be ready to be much quicker with your responses to get into trades, and you have to be willing to not quite to have the not to quite have the same percentage wins. The shorter time frame that you trade in, the less the lower your success rate will be. Not by a lot, but by a percentage point, 2 percentage points. So as you move up the time scale, 2-minute chart, 3-minute candle chart, 10-minute, and the daily. The daily, for instance, is the most accurate in any system, okay? The least would be the 1. And I'm talking about a range from maybe 72% to maybe 65%. So still good numbers, but why not tend toward the more the larger percentages in your favor. All right, okay, enough about the frequent, reliable trigger. Here's the reliable part, okay? Test it to give you a pop so that you can take your scalp more often. When I say a reliable trigger, I mean not only one that will eventually get you the profit, but one that gives you a pop, one that has almost an immediate movement, at least the first or second candle after you apply your trigger, then you really should get a pop. So you need to test your triggers to be not only frequent, but reliable to give you a pop so that you can take your scalps more often. If you move your stop to break even on your remaining contract, I always suggest that you take 2 contracts at least. I'm going to go through that. But you want to take your scalp and then move to break even on your remaining contracts. I'm going to go through that a little bit more, but I wanted to emphasize the pop. It is very hard to test a trading plan based on past candles. And I'm going to show you kind of why. I want to make the point that testing in real time, it may take you weeks, but it gives you the best result that will be real, okay? And I'm going to show you why that is. I've tested, of course, my trading plan, but if you're going to do it on your own, you want to test in real time. This is a simple chart. Let's say this point right here was a point of sell, which would be in our system. And so this would be the place where you would be selling. We would be putting our stop up above this area right here, okay? Simple, basic, simple plan. Now, as the market continued, this here, you're not sure what happened. I mean, you can say, hey, there's a down, I got a nice profit from my trade here, but that's not what this may be saying. This market, since this candle closed here, this market may have opened here, as it looks like it may have, and it opened here, right? It wouldn't have opened here. So it opened here. Now, did it go down, up, take your stop out, okay? Or did it go down first and get your scalp? Or did it go up first and take you out, and then would have given you a scalp if you didn't get knocked out? You don't know what happened with candles like this. And so I'm saying to you that to sit here and to look back and test a chart and say to yourself, well, this would have been a winning trade. Look, would have scared you maybe, but it looks like you don't know what came first, okay? The chicken or the egg, as they say. So again, you want to test in real time, okay? And you want to limit the time you spend trading, okay? The less time you have to trade, the more focused you will be. And focus is one of the Mount Rushmore keys to profitable trading. We had a trader we coached just yesterday that literally takes 100+ trades a day, and he trades all day. The first thing I said is, how's your focus? Focus. You don't want to be the person that misses a trade that your trading plan gave you. Okay, I mean, this is why traders jump out the window. They don't jump out the window because they lost. They keep losing. They jump out because of opportunities they had, or a big gain that they had that they don't take, or a big trade that they should have taken but they didn't take. This is the reason people jump out of windows. And I'm not suggesting that that's going to be your destiny, but I'm just saying when that hits your head, you gotta have focus. If you don't have focus, you're not going to be there for trading. You shouldn't be in this, okay? So if you limit the time you spend trading, you are forcing yourself to be more focused. You're saying to yourself, I only trade from 8 to 12, Monday, Wednesday, and Friday, okay? I adjusted a little bit for this presentation. Monday, Wednesday, and Friday, from 8 o'clock to 12 o'clock, that's when I trade, okay? And that means that that I know that I need to have my action happen in that period of time. I need to be on top of it so that I don't miss what I have in a limited time. Now, 4 hours is plenty of time to trade a day. But if you only have 90 minutes or an hour or 2 hours, it's much more important for you. It's important for everybody, but limit your time to trade, and don't look at it as a disadvantage. It is an advantage, okay? I've seldom seen consistent success for retail traders who trade all day. 90 minutes to 4 hours seems to be the sweet range of the people that I've coached over the last few years, especially in prop trading. If you insist on trading all day, you have to take breaks and have a mental strengthening program so that you can recharge your focus. We have, we offer in one of our programs what we call subconscious trainings. They're meditations. They last 7, 8, 10 minutes long. You can take those during your breaks to refocus, but you need to take time off if you're going to take. I really don't think you should be trading all day long. But if you're a must, I've been doing it all my life, I love to do it. Okay, maybe you're the outlier, but still, I suggest that you take breaks. I've just never met anybody that could follow their trading plan all day. Without exception. Now, if extreme limitations, if you only have an hour to trade, consider the 2-minute chart. I mentioned that with each increment that you go down, in other words, the one is the least accurate in a trading plan that you've tested. There is a jump. It may go from 65 to 67%, and then from the 2 to the 5. Maybe go to 68%, 5 being a little bit better in result, etc. So from 1 to 2 is a big jump in your favor. So go to the 2-minute chart, and you'll just get more triggers. It's just logical, okay? So the other thing I want to mention to you is you don't want to trade 10 minutes before a report or 10 minutes after a report. Some of the trading, I think Top Step, when I was trading through them, they wouldn't allow you to trade before a report um, 5 or 10 minutes before a report or after a report, because they know that that whipsaw is just a 50-50 deal. And we're not here for 50-50 deals, okay? And they won't allow you to put a buy stop in and a sell stop in right before a report. They won't allow you to do that. If you're going to prop trade, you have to start thinking like a professional trader. And the rules, the restrictive rules that they give you is really to force you to act like a professional trader. 90% of professional traders, unless they are focused totally on how to deal with reports, most of them use options anyway, not futures. But it's just not a good idea. Okay, don't trade 10 minutes before or after. There are a few professionals who I've ever seen over my course of, and even all those men and women that I was responsible for, and that was just one office. I was responsible for several offices, and the professional traders who do the job and consistent with their results for the traders, and you as being your own trader, don't deal with these reports. Stay away from them. You don't need them. You're not looking for home runs. You can get a home run, but you don't need to have that. Okay. You want successful prop trading. Is all about consistency. Why would you apply a trade in the environment that often results in whipsaws? Greed made me do it. I wanted the opportunity for a big quick hit. That's not logic. That's crazy. Okay. It's not worth it. So I want to give you, in summary, and then I want to give you a quick offer that it's really, I'm not going to ask you to buy anything, but I want to give you a suggestion that you may want to take advantage of. You want to put the odds on your side when you're trading. These 4 points that I've given you, if you take them into consideration and actually apply them, you'll stay away from that red line, and because of that, your cortisol level will be down and you'll be a much better trader. Okay, remember that the points that I made was you want to have equal or greater than 50% of your entries should be scalps. And I want to also say that the other 50% of the other remaining contracts are runners. So when I take a scalp, I always move the stop to break even on the runner, and then I manage the runner, which is for another discussion. So when I advise to you that you take scalps, at least 50%, I'm not saying do it exclusively. I mean, I'm a guy that likes to hit home runs, even though I was a singles hitter in high school baseball, but pretty consistent. I hit one home run inside the park in my entire high school baseball career. But I'm saying that listen, futures gives you the opportunity for a run. Sometimes you can get very lucky. Okay, I want to be there for it. I want to prepare myself to be lucky. Okay, let's just say that. So I take half or more of my contract to scalp because I don't want to be anywhere near that red line, and then I want to let that other one run. And I'll show you how to manage that if we ever get together, so that you're not giving the profit that you have back and then jumping out of a window. Okay, you want to employ a frequent, reliable trigger. Again, you don't want to challenge the issue of patience or lack of patience, and you want it to be reliable, and you have to test it in the right way. And remember, when I say reliable, I don't mean just eventually giving you profit. I mean that in the futures market, you really want a trigger that gives you a pop, one that you know in the next couple of bars, next couple of candles, you're going to have what you want 2/3 of the time. Okay, so you want a frequent, reliable trigger. Okay, and you want to limit the time you spend trading. Why? Focus. You want to be the most focused trader that ever lived. Okay, and when you limit your time and you stick to that limit, you're going to, and don't expand it. When 12 o'clock hits for me, I'm done unless I'm in a trade that's in it, but I usually don't take a trade after 11:30. That's another. So I'm looking for conditions to stay in that time frame, not to expand it, and you should too. So limiting your time that you spend trading just will require you to be more focused. And what does that mean? It means you're going to be more on top of your trading plan. It means you're going to grab the signals. You're going to take your scalps. You're going to let the thing run, your others run. You're going to do it right. Okay, you're not going to be doing other things with your mind. Okay, and don't trade against reports. It's just a bad thing to do. Whenever I see advertisements out there about trading, trade 10 minutes a day. Look, there's some people that do it. Most, even when you learn it, don't have the temperament to do it. it's not worth it. You know, you're not here for quick fixes. You're here for long-term income. And to do that, you want to limit your time. You want to take frequent, reliable triggers. You want to stay away from the red line, and you want to trade somebody else's money. How about that? So that's what you really want. Okay. So let me, I just wanted to show you that simple beats complex. This is the chart I trade off of. There's a couple of moving averages. Okay. There's an RSI in the bottom that I don't really look at. I look at it in certain situations. I use it not whether I should get into a trade, but for position sizing. Okay, and position sizing is another discussion we need to have if you're going to be a professional trader. Or listen, if you're trading on your own, you're a professional trader. You're trying to be a professional trader. Maybe it's in a limited capacity. You're not trading anybody's money, but your money is more important, really, isn't it? So you got to think and act like a professional trader. And I'm just saying to you that position sizing is a big thing. Okay, it can be a very big thing once you start to get. I want you to win first, and then I want you to show you how to win big with the proper position sizing. That's where I use an RSI. But I just wanted to show you how simple a trading plan could look. Okay, now if you're new to trading plan or new to prop trading, you know that you may not know that firms will fund you for $50, $100, $300,000, and you'll earn 90% of the profit. In fact, Apex gives me, it gives everybody $25,000 of the first 25,000. You get 100% of that. So whatever, it's big money. I've traded it for now several years. I have numerous passings. I've been requested money. You know, I want you to be in this situation. Okay, I'm coming out with a book in the first quarter of next year. So really about 6 weeks away, not even within the next 6 or 8 weeks, may bleed into February. I'm doing the final editing now. The book is called Their Money, Your Profit, Cashing In on the Prop Trading Revolution. And what I need, what I want, what I've decided to ask you for is your case study. I want case studies, and I've got several of them, but I want the more that I have, the more I can include it in the book, or there's still time to include it in the book, or I can include it in the your case study in the promotion of the book. Okay, so the book is coming out the first quarter. That's the schedule right now. Again, it may bleed into February, but I'm gathering. We've got time from now to then to see you advance from grabbing your first account, or if you've been doing it for a while, and grabbing a new account or the one that you're trading, passing it in the evaluation stage, then passing it, and then reaching the green line, what I call the gold, where you can start getting paid in the funded stage. I want to take you through all of that, so that, on a coaching basis, so that you can, where we're meeting an unlimited number of times. It's up to you how many times you want to meet in a very short period of time. And we have general, we meet as a group too, but I don't want to get into the specifics of it. I just want, if you're interested, I want to send you the PDF on this. Okay, so this is the Loaded Gun. I call it the Loaded Gun Simple Trading Plan Case Study Group. Okay, you're going to get the trading plan. They're going to get the Disciplined Trader Trading Plan, which is the Loaded Gun Simple Trading Plan. If you already have it, I got a similar program for you. For those that don't already own it, just ask me about it. But I'm talking to those that don't own Loaded Gun and have been struggling with prop trading, or considering prop trading and don't want to struggle. There's one-on-one coaching involved in this. There's group coaching, but it's a plan to get you successful before this book comes out. Okay, I want your case study. It takes you from the evaluation fee to the funded fee to money wired in your account. I want you to experience what it's like to start getting money and continued cash. They send it directly into your account on your command. They used to request twice a month. You could request. Now you can request your money and your profit anytime. Okay. What I'd like you to do is just email me that you're interested. Just write me admin@thedisciplinedtrader.com, and just in the subject line or somewhere in it, just put "I'm interested in the case study group." And when I see that email, or when my crew sees the email, I'll be doing it today. So if I see it, I will respond to that email today, and I will send you a PDF that will explain the entire case study group and why I think that if you're struggling, this could be an answer for you. There's no guarantees in life, but I think you've seen that my experience and my understanding of what works and what doesn't, especially from the mental standpoint, and incorporating that in a trading plan so that you don't have to worry about the mental part. Just write me at admin@thedisciplinedtrader.com and say, I'm interested in the case study group. And I will send you the PDF on the case study so that you can review it and then decide for yourself whether you want in or not. Okay. And again, when I get your case study in time for the printing of the book, I'll either put it in the book on your approval, or I'll use it. And some people like to stay private, but I'll get permission to use your letters of your name or your first name and last. Don't worry about that part. But I just want you to be part of this if you've been struggling. And are there any questions? I don't. My presentation is over. Let's see if don't know if I see any questions here. I've got about one or two. I could probably take one or two questions. Yes, and that was a 5-minute chart that you saw, but it could be any. Again, a lot of the guys trade at 2 minutes because they're limited in time. They go between the 2 and the 5, and I trade the 5. When I start to get a runner, I do move to the 2 and use the signals there to preserve my run. Okay, because I'll get quicker signals on something that backs off. Now, sometimes I'll take my profit earlier than if I use the 5-minute. But when the profit is big enough, it's substantial enough, you really don't want to give it away. When I take a profit a little bit too early, and I took a nice profit, but it went again much more, I always say to myself, hey, I'm a benevolent guy. Let me give it to the next person. I'm not here to take everything. Good luck to you, and I really admire the fact that you took the profit that I didn't take. So you always want to stay positive. All right. Any other questions? I think we may have room for one more question if we don't. I don't see a question, which means that I've been probably pretty clear on my explanation. So I'd love to coach you in the case study group, because you'll be helping me and I'll be helping you in return. So thank you. I appreciate the time today.